Hi, I'm Lenny Sharp, leader of the Sharp Mountain Homes team of eXp Realty. We're here in the communities just outside Yosemite National Park, and our specialty is helping short-term rental or Airbnb investors invest in our area and build their portfolio of high-performing, cash-flowing properties. So how do we help you? Well, there's a variety of ways, and we have many tools. We also have a 57-page investor guide, which gives you all the key information that will help you select the area and select the home that can generate maximum profitability. Our latest resource is our Yosemite STR Deal Finder. This is an app that we built on Base 44 based on AirDNA data. We literally licensed all the data for all the Airbnbs in the Yosemite area, and in fact, the northern and southern Sierra Nevada mountains. If you're thinking about an STR in our area, reach out to me or any of the members on my team. You can see our contact information on my website, sharpmountainhomes.com, and give us your information, download the investor guide, and use that as the foundation for your search. We look forward to meeting you, showing you properties, and starting you on your Yosemite area STR investing adventure.
Today, we are going to do a deep dive into my STR Deal Finder app. And we're going to take a look at this home on Leach Road in Ahwahnee. So beautiful, large log home. And I'm going to actually run this analysis in AirDNA to show you how that works. And that would be the way we would have done this prior to developing my app. And then when we go into the app, I think you'll quickly realize why I developed the app in the first place. So I am using AirDNA data. I licensed the data for our entire region, and I plug into that data directly through my Deal Finder app. So this home is on Leach Road in Ahwahnee, and just paging through the photos here, you can see, a beautiful log home, as well as a shop which has tremendous upside opportunity, and a manufactured home that's on a permanent foundation that's currently rented to the owner's sister, but that also provides some additional revenue opportunity. So this is the home. We're going to jump over here to AirDNA. We're going to input the address, so that is the option. So let me see, just double check the address. 43227 does begin to auto-populate. So as soon as we get to Leach Road, it will pull up the proper address. Okay. So this is the Rentalizer app, which is essentially AirDNA's interface into their data. Now, first of all, as you can see, it does its best to pick the bedroom, bathroom, guest count. Not sure where that data is coming from, but it thinks it's a 2-bedroom, 3-bath home suitable for 4 guests, which only projects $48,000 in annual revenue. And obviously for an $855,000 home, that would not be sufficient. But as you can see, this is 3 beds and 2.5 baths. So we'll just jump over here, make that correction, 3 bedrooms, 2.5 baths, and I think we can accommodate 8 guests. So I'm gonna update that, and you'll quickly see we jumped up to $69,500. So again, not great. 54% occupancy, $350 a night ADR. And then you can see from this map the selected comps. There were 15 comps selected. And then if you choose to, now you can go through these and deselect them by clicking the trash can. So if you believe that any of these comps are not suitable just on the surface, now again, you can actually click through, see the comp. This is one of the comparable properties, and then other properties surrounding that. And you can also see this listing on Airbnb or VRBO to evaluate. Again, what you're trying to do here is just determine, is this truly a comparable property? You can read the reviews. This property has 211 reviews, 4.96 average rating, so pretty strong. So that's how you would do it in AirDNA. And then let's say you go through and eliminate some of these comps, but you want to go a little deeper, and so you can pull up the existing comp set as well as the available comps. So the available comps is going to go to a broader range in terms of both geography as well as bedroom, bathroom, and guest count. So this is an effective process, and again, as you make these changes, it will reflect it in the analysis. So just as an example, if I think, well, this $46,000 or $41,000 or $27,000 or $23,000 comp are not good comparisons for our property, we just eliminate that. And as we eliminate that, those lower performing comps, you're going to start to see the number climb a bit. Okay, so that's one way to do it in AirDNA, and it is, as I said, fairly manual. So with that, I am just going to go back to the listing. I'm going to share the link to the listing, and I'll show you one of the features of my app. We'll say we want to do a new analysis, and you'll notice here I have an opportunity to just paste that listing in that I copied, and it will now pull the data from the MLS, extract that data automatically, and populate the analysis with those initial findings. So we now have 3 bedrooms, 2.5 baths, maximum guests, because the formula I use as a baseline is 2 guests per bedroom plus 2 extra for the house. So that's how you get to 8. Square footage, your lot size, and if there are any HOA fees. So, I mean, that's a good starting point. And then the other thing we're going to do, though, is we're going to jump over here to STR, because what we're doing now is we're actually pre-filtering our analysis to try to get to as close a comp property as we can get. And in this case, we have a couple of options. If we think the radius is super important, like this is a very specific neighborhood, you can narrow the radius. And again, this is what's going to select our comps. But here's the most important thing I added. Okay, I can pre-filter for amenities. So when we pre-filter for these amenities, then it will only pull comps for the property that have these amenities. Now, if you've watched any of my videos, you know that hot tubs add significant revenue, obviously, to competitive properties as well as yours if you're projecting ahead. So I recommend every host add a hot tub. So in this case, the house doesn't have one. So it's got to be added, and it gives us an opportunity to put the cost here. And I'm just going to put $10,000. So this will factor it into the purchase price. We will say we're going to add a game room, and in this case, less investment for that. We'll say $5,000, which, as we'll get into this a little later, you'll see the game room is part of the expansion strategy. So we can also click this Pets Allowed. That typically will add some revenue, but I just want to start with this. And then the other thing I do is, if you look at the AirDNA, this is essentially a median revenue projection. So it's going to take the 50th percentile of the selected comps. I guess from my perspective, that basically says we're setting out to be mediocre, and I don't think being mediocre makes sense in this market. So I do have that option. You can go to the conservative case, which is the 50th percentile. I set the base case to 70th because I'm basically saying, yeah, you're going to try to do better than at least some of the competition. And then if you have very ambitious plans to create an over-the-top experiential stay, you might go aggressive, which picks the 90th percentile. So base is 70, conservative is 50, aggressive is 90. So I'm just going to go to the base case. So now we've just got the property with the proper bedroom, bathroom, and guest count, and the amenities with the cost associated with adding those amenities. So that's going to filter our comp set. Now you can also jump over here to expenses. These are some default values. Try to update these from time to time, but you can override any of these numbers if you in fact know that, for example, one of the big ones is, are you going to be hiring a manager or not? In this case, we're assuming self-managed. But again, this is the expense area, and then this is your financing assumption. So this is going to affect your cash on cash returns. And then again, we're just going to use the defaults in this case, which are market rate interest rates, assuming a 25% down payment over 30 years, closing costs at 1%, which are probably fairly typical. And then we can either select none for furnishing mode because the house is already being sold furnished, because it might be current Airbnb, auto estimate, which basically plugs in a number that we feel is reasonable, or manual override because you may be already working with a designer and have established your furnishing budget. Anyway, so we've selected the comps, added the cost, taken a quick look at expenses and financing, and we're back to the property. So let's just start with that. Again, it pulls all of the information from the MLS down into the home configuration for the main house, and we're going to create and analyze. So we'll sit back and wait a moment and see what it comes up to. And I think we were at just under 70,000 with the previous analysis. And by pre-selecting the comps and baking those costs in, those will be reflected in the analysis. And then I'll show you how we, in fact, can further refine the comps. Okay, so now we see 82,000, that's the base case. You can see from the revenue that this is the monthly revenue projection. So 44% occupancy, a little higher ADR, which gets us to that $82,000 base case. I can also edit and rerun. So let's just go ahead and do that. And we're going to simply change this assumption from base case to aggressive, because we're really trying to understand now, like, what is the potential? So this is a unique property. We're going to do something special here. We believe that it might be better than average. So let's go ahead and take a quick look at the aggressive case. So that jumped up to about 91,000. I think that might be more in keeping, but let's go ahead and take a look at the comps that were selected. So I also have now the comps, 25 comps that were selected for this property. That was on a 20-mile radius. Let's go ahead and edit and rerun this on a little tighter radius. So let's go down to 10 miles and see how many comps it pulls. So this is in Ahwahnee, which is outside of Oakhurst, a little specialist area. Didn't move the needle much, a little bit, and as you can see from the comps, still basically the same comp set. So now what we need to do is look at these comps, because what we're trying to determine is our revenue forecast commensurate with what we would actually experience based on the comps that were selected to produce that forecast. So what we're looking for is outliers. So this is close, it's less than a mile away. It has a hot tub, it has a game room, it allows pets. So we put those buttons on the comp property. Now this one has a pool, so it's also doing just about $80,000. So what we want to do here is, this one's a low performer. It's only doing $219 a night ADR with 16% occupancy, which is super low. So let's jump over to that listing, because what we're going to try to do is determine why is this a good or bad comparison to include. So I know this property pretty well. It's actually now a new property on Airbnb. It was sold by one seller to another. It's not a bad home, but the reality is it's nothing of the caliber of the target property, and it's a new listing with only 5 reviews. Honestly, I'm just gonna deselect this because I don't think it's a good comp. Even though this number is a little bit lower with the ADR and the occupancy, it's not terrible, so I'm gonna leave that in. So like I said, I'm just looking for outliers, right? So 57, 88, 60, 30, I'm just gonna eliminate this one also, because even without looking at it, it's probably not very competitive. Now this one has a little bit higher ADR, but only 13% occupancy. That might be interesting to look at. So we'll just jump over here and see that. And all right, this has a hot tub. House doesn't look terrible. Kind of plain vanilla. Hard to tell. They're not really showing much of the architecture. So they've clearly kind of picked up on some of the sort of photo amenity hot buttons that people tend to like. It's very bright, but as you can see, they're not showing really much of the exterior. So that says to me this is not a dramatic, imposing home from an architecture standpoint. So again, I think that's pretty plain vanilla, and the performance is not great. So I'm going to probably take that one out as well. So anyway, we've got the comps. This is the process you go through to determine whether you're appropriately comping the property to get to an accurate revenue forecast. Now, here's going the other way. And to be honest, you also have to look at the other side. Is there a home that's being used as a comp that is so much better that we have to eliminate it for the other reason? So let's go ahead and see this. And typically that's going to be because the location, the views, etc. Now, this link is broken, so this home might have been sold, not on Airbnb anymore. So that's also a reason to think about taking it out. So this could be some bad data. It says it's fresh. In any case, that might be a candidate for elimination. And let's go ahead and just take that out of the analysis. And then, so I took out a couple of low performers and I took out a high performer. And what I'm going to do now is rerun with 21 comps. So we're at 90,800. And in a moment, we're going to see what the new number is. Okay, so eliminating the low comps would have brought the number up, but we eliminated a $116,000 a year comp, which then brought it back down by $1,000. So kind of pretty much neutral. But with that, we've got, like I said, a basic analysis. This is a higher price point. So the other thing you have to think about is it's a log home. There's not a lot of log homes. People look for something unique. Maybe you could command a higher price and we could get that revenue up. Comp analysis to project revenue is only as good as the available comps. And in this case, it's a little bit hard to find an exact apples to apples comparison. But I want to show you another powerful feature, right? So you saw from the listing photos, you've got this shop, and we walked the shop. We've got a tour of the shop. So there's actually two things. Now, one feature I've not added, but this mobile home could be short-term rented. Most likely it could be long-term rented, but let's assume we could short-term rent that. And then this shop has got a very expensive space. You could build, a cool loft apartment in here, as well as using this for game room. So this is additional opportunity that is not being captured either in AirDNA or in my app. So in AirDNA, what you could do is at the same address now configure a couple of other listings and run those and add the numbers up and see. But what we want to do is we are just going to add another home. Okay, so we've got the main home. Home 2 is existing, so we're going to start with the manufactured home, and we'll call it a cabin. I should probably add manufactured home. I'm going to distribute by square feet for the purchase price because this is part of the purchase, and I think this is about 1,000 square feet. It is a 2 with, we'll call it 2 beds, 1 bathroom, and I'm going to say 4 guests max because it's not very big. So this is home number 2. Now, we can also add another home because that shop can be converted. So this is a conversion, and we'll call this not really a condo. Well, we'll call it a condo for now. And we're gonna also, for purchase price, we're going to manually input because there's actually a conversion cost option here, and I'm not sure how this is going to work, so I'm going to make this 0 on the allocation and make that 0 and make this conversion cost $50,000, which is probably a little bit high, and I'm going to assume that no septic or well will have to be added. And this was going to be, I'm going to call this a 2-bedroom with 3 beds, 1 bathroom, and 6 guests. Okay, and just in case it picks up that square footage and does something with it, I'm going to say that's 1,200. So now we've got the main home, the mobile home, and the converted shop. So now I am going to rerun the analysis. What this is going to do is go out to my database and not just pull comps for the main house, but pull comps for the second home, the mobile home, as well as the now converted shop. Okay, so this is important, right? We just jumped our revenue up to $211,000. Now that's on the aggressive side, so maybe you temper that, but the reality is we have got now a more appropriate analysis for this property because we've incorporated the other 2 homes, and these are going to add to our value. Like I said, you could rent the mobile home as a long-term rental. It's probably going to be, I'd say, $1,800 a month revenue, and that could also be an opportunity to house your cleaner or handyman or on-site manager. So here's the comps for the main home, which we already saw. Actually look at home 2, right? So this was the 2-bedroom, 1-bath mobile, and these numbers don't look crazy. And then home 3, which is the conversion for the shop, which also delivers similar numbers. But by having 3 units all on Airbnb, we now have significantly increased our revenue. And again, just to show you that you can make changes, you can change any of these assumptions and then just rerun it. In this case, I'm just going to go to base case to see what that says. But remember, we were at about $90,000 a year previously. Now we're at 140. Actually, 90,000 was the aggressive case. 70,000 was the base case. We doubled that to 140 with the multi-home configuration. So anyway, that will wrap up this demo. Sorry for a couple of hiccups. The app is still in development, so we run into bugs from time to time. but you can see that by pre-filtering the comps, by giving you the ability to deselect those comps with a little bit more information, you get a much more holistic picture of the investment potential for this property.